Welcome everyone. This is the session for Group Study Unit D, but we're going to look at non-current assets held for sale at a group perspective as well. But not only that, but also look at non-current assets held for sale specifically. So I'm going to swap there immediately and share my screen. So what we are supposed to see is the following. If I go through the information that you need to be able to master, you need to be able to discuss and apply the accounting requirements for non-current assets held for sale, as well as the classification. You need to be able to prepare group financial statements when there's a discontinuous operation and discuss and apply the treatment of the subsidiary which has been acquired exclusively with a view to subsequent disposal where it's a non-current assets held for sale. If we go through it, remember there's certain criteria for IFRS 5 for non-current assets held for sale. So make sure that you understand the held for sale classification according to paragraph 7, paragraph 8 of IFRS 5. So then we need to understand what is a disposal group. So you need to understand those definitions specifically. Look at the classification of non-current assets held for sale. Make sure that it's an asset that's available for immediate sale and it's highly probable, and we have these criteria which we need to meet. So make sure you understand those criteria for the classification of a non-current asset held for sale. So when we measure and present non-current asset held for sale, there's the following approach. We have 5 steps. The first thing is immediately before the initial classification, we should measure it in accordance with its applicable IFRS, whether it's IAS 16 or whatever the case might be. Then on the classification of non-current assets held for sale, we will write that down to its fair value less cost to sell, if it's less than its carrying amount. And any impairment losses arising under IFRS 5 is charged to profit and loss. Unlike IAS 36, we need to now for IFRS 5 go and recognize impairment losses in this instance. So I will not consider impairment if the asset wasn't impaired immediately under its own separate financial or separate standard. But the moment it becomes IFRS 5 and the fair value less cost to sell is less than the carrying amount, I will then recognize impairment under IFRS 5. The moment it's then a non-current asset or held for sale, we will not depreciate or amortize any further. That's very important. The next one is our subsequent changes in fair value or fair value less cost to sell will be recognized as a further impairment or reversal of impairment losses. And all of that goes through the statement of profit and loss. And then this non-current asset held for sale, whether it's one asset or whether it is a group of assets or a disposable group, it will be represented or presented as a single amount on the face of the financial statements, separate from all other assets, but normally as a current asset and liability. And we need to make sure that we understand those specific requirements, those steps. So when we look at non-current assets held for sale, you will see in my financial statement separate disclosure. Okay, and then if we go to the part that we need to recognize, amounts recognized in other comprehensive income and accumulated in equity relating to non-current assets held for sale, there's certain items, and then liabilities directly associated with non-current assets held for sale separate. We cannot offset liabilities asset. We need to show it separately. Okay. Then we have a discontinued operation. This is a component of an entity that has been disposed of. So I need to make sure that it's now a discontinued operation. And for discontinued operation, we present a single amount in my statement of profit and loss as discontinued operations, and it's a after tax or after tax amount that we will recognize. If we get that on my face of my financial statement, we will see we have continuous operations with all the information, and then we will have at the bottom discontinuous operations for the year from the discontinuous operation, one amount. But for groups, this now means that I will have, when we present the statement of profit and loss, when we have the part attributable to the parent and the NCR, we will have profit for the year for continuous operations and profit for the year from discontinuous operations for the parent and in non-controlling interest. So make sure you understand that split specifically. Okay. You can go and work through those examples and make sure that you understand that you are happy to disclose that. Then when we have a subsidiary that's held for sale, we need to see the following. If an entity is committed to sale, or this subsidiary, there will be a loss of control, but we will remain or retain a percentage share, we still need to classify it as held for sale and disclose it as discontinued operations. Make sure you understand this part of my paragraph. So you need to see the moment that I'm holding a subsidiary which I want to sell, and it's not just the full part. If I still will keep a percentage share, it's still disclosed as a discontinuous operation. So make sure you understand that part. You can go and work through IFRS 5. I really hope this helps you just wrap your head around it. Have an awesome day and keep well.